Hello, chart watchers and DecisionPoint faithful. Welcome to this Friday, March 22nd, 2019 DecisionPoint show with your hosts, Carl and Erin Swenlin. For those of you joining us for the first time today, welcome to the show. And for our regulars, welcome back. All right, we've got quite a packed agenda today, but first I want to welcome my co-host, Carl Swenlin. How's everything going with you today? And what are you thinking about the market this week?
Oh, I'm suitably impressed with today's sell-off.
Yeah, it's about time. I keep looking for it, and we finally got it today on a Friday, going into the weekend.
Yeah, my first impression is I don't think it's quite resolved yet. Whether it's just another short selling, or whether we're really getting something going.
Mm-hmm. Exactly. All right, well, let's move on and we'll talk charts. So we're going to look at the major indexes, well, the Nasdaq and OEX relative to the SPX, as well as the small caps and mid caps. Our weekly review of the Scoreboard indexes, I'll be going over those. And then we will look at our DP indicators. And then Carl's going to take over and he'll be looking at the big four: dollar, gold, oil, and bonds, and what he's thinking about those. And then as our bonus material, we're going to look at the advanced decline lines, divergences that we're seeing, and discuss that. We will also go over what we're seeing on the McClellan Summation Index. And finally, we're going to finish off with a look at Nike and that chart. So lots to cover. Let's go ahead and we'll start with the DecisionPoint scoreboards. And I'm going to admit right now that the SP 500 did end up with a buy signal yesterday. And then today it just turned right back down to a sell signal. So rather than update that, I feel that the short-term PMO sell signal that came in earlier in March is really still valid based on what happened with just the two-day whipsaw. So. And then you're going to also notice the Dow Industrials still haven't gotten their buy signal, despite the 100, SP 100 and Nasdaq 100 getting theirs earlier. I think it was, yes, last week. And you'll see on the Dow, we're still looking at a declining PMO. It doesn't even look like it wants to start moving back up to give us a buy signal. And now looking at the DecisionPoint sector scoreboards, at this point, everything's on a buy signal in the intermediate term, which means that the 20-day EMA is above the 50-day EMA in all of our sectors right now. As far as the long-term trend model, which tells us if the 50 is above the 200 on a buy signal, or if it's below, which makes it a sell signal. And what we consider, a configuration, a bull market configuration or a bear market configuration, is really based on the long-term trend model sell signals. So we're looking right now at energy is still, it's trying to make its way up. It's starting to look a little better. Financials, still the laggard, I would say, of most of the sectors lately. Comm services, I know, is improving at this point. And materials is still pretty much not doing much of anything. So I'm not looking at any of those signals disappearing anytime soon.
Comm services is on a long-term.
Did it move to a buy? Oh, okay. I didn't have the 50 crossed above the 200. So now we would move that to a buy. And it's not, like I said, it's not surprising because we have started to see the comm services sector joining the technology sector with a pretty good move to the upside.
Yeah, that happened earlier this week. I should have sent you. It was my fault.
Well, I watch it too, so I should have paid attention too. All right, so let's look at the price relative as far as what's going on with the Nasdaq 100. I put the S&P 100 in here as well, so we're looking at some of those large caps versus, or the larger caps, the big names, and seeing how they stack up against the S&P 500, as well as mid caps and small caps. And really the main thing that I usually point out on this chart, and what we can see right now, is that, we really do want to see participation by the small and mid caps, mainly because once they start to turn up, that's usually good for the market. You want them participating more so than some of the others. And you know, we lost that relative strength. We're still heading down, but we're getting ready to hit the low that we saw back here in December on the relative strength. So, you know, we could be looking at a possible turn to the upside here soon, but we'll have to see what comes of that. And I'll be interested just to see what kind of divergences maybe shape up on this one. All right, but let's go look at some more charts. I'm going to go through basically the DecisionPoint live chart list. And so you can get to the DecisionPoint live chart list. Just go up here to the blog articles or articles tab, and then click on the DecisionPoint blog, and you're going to see the link right there at the top. And you can look at all of these charts that I have in here anytime you want to. And I do try and keep these annotations up to date, certainly at least twice a week. All right. So what I'm looking at right now as far as the Dow Industrials, I think you could maybe make a case for a double top here. Typically, you want to see those tops really line up with each other. But, you know, based on the closing prices, I think it's pretty close. So I've labeled it a double top at this point. And, you know, that, of course, tells us the expectation is more move to the downside and a likely break below that line. But it isn't officially a double top until it executes. And so I'm looking at the formation of a possible double top. So we'll have to see if we actually get an execution of that pattern, because we could end up finding support down here on the Dow and then just another move up. And then we might have an interesting formation there as a possible double bottom, although I'm very picky about my chart patterns, and double bottom is supposed to come in off of a decline. So it wouldn't really be an official one. But right now, let's just pay attention and see if we end up with that double top. But here's what I wanted to point out on the Dow, especially after we looked at those scoreboards, is the fact that the PMO, you know, it made an attempt to even turn itself upward, and it failed pretty miserably with today's decline. And we're seeing the margin starting to build again between the PMO and its signal line. So I wouldn't be looking at this point for that buy signal anytime soon. All right. One of the reasons we're here is look at some weekly charts. And you're going to see, of course, a lot of similar patterns and trends. So I'm not going to spend too much time. I want to spend more of my time on the S&P 500. But as you can see with the Dow, we had this rising trend coming off that low back in 2016. The main thing that I want to point out, and you're going to again see this on most of the weekly charts, is we had a failure. It actually ended up forming some resistance as far as that top we saw previously, at least on the Dow. And then, of course, the PMO is decelerating again and wants to turn down. All right, Nasdaq 100. Go through that quickly. Again, topping PMO is what I would be concerned about right now. We did hold support today along this low we saw back here in August and the top back in June. You could also line it up with that November top. That would be the next spot that I would look for a decline. At this point, with these two tops, we held that area of support around 7,300. That's still looking okay here when you look at it in the thumbnail. Big problem I find is that topping PMO. But, you know, really, Dad, I mean, we look at the OBV. We really got a lot of good volume behind that run for the NASDAQ 100, which I guess really does point to the strength of technology right now.
Right.
All righty, in the weekly chart for the NASDAQ 100, again, you similar situation with these the rising trend that came out of the lows back here at 2016. And again, we actually popped above that slightly today on the NASDAQ 100, but overall, it did fail. And we closed near the low of the week, and that's generally not what you want to see. You want to see a close closer to the intra-week high. We do still see a PMO that's rising, though, in the intermediate term. You know, so that is suggesting that we should eventually get ourselves back up above that high we saw in 2018 and start challenging possibly some all-time highs. OEX, like I said, very similar. We've got wedges, and there's another topping PMO. The wedge pattern, of course, is bearish. Haven't gone down quite to test that rising bottoms trend line, but the expectation is a breakdown there. Weekly chart, similar. We got up to that area of resistance, if you will, above that rising trend, and we failed, and we did end up closing at, well, gosh, near the low or at the low for the week, just above the low for the week. We closed on the S&P 100. So not necessarily a good setup here going into next week. All right, the S&P 500. Like you saw in the OEX, I am picking up the wedge formation again. And here's that, like I said, that whipsaw buy sell that came in on the PMO. And like I said, I really didn't think that it was worth recording after I saw what happened today with the quick whipsaw sell signal. One of the things I'm really concerned about when I look at the S&P 500 right now is this very clear negative divergence with volume on the OBV. And, you know, if you're in a nice rising trend or a rally, you want volume to be supporting that. And right now we're just not seeing that. And that does give us a pause and a suggestion that we might finally get the breakdown below the bottom of this wedge. The weekly chart. And here we are. Buy signal coming in here. You can see that for me, when I see these rising trends that are this steep, they're very hard to maintain. And so I would expect to see a breakdown of that rising trend. And you saw on the others that when we reached this rising trend line here, that's where we started to see some failure. Right now, we're seeing failure right here at that top we had back earlier in 2018. All righty, and just a quick peek at the Russell 2000, move right into, so right here I'm looking at a possible descending triangle, and we got the breakdown. You know, that is a problem, obviously, and the PMO is topped again under the signal line on the Russell 2000. We, like I said, we really want to see some participation here by the small caps, and they're just, it's not happening. And weekly. There we go. Topping PMO now on IWM for the Russell 2000. So that's certainly the failure here at that overhead resistance, giving us some, giving us pause as to a further decline, and really seeing a top of the PMO below the zero line is generally not a good thing. I did find one back here, and you could see it did come before the decline we had going into 2016. So tops below the signal line, tops below the zero line, neither of those are particularly a good thing to see. All right, let's look at our indicators, and then I'm going to hand it over to Dad. All right, so we were actually talking a lot about this chart before the show because we did certainly get climactic readings to the bearish side, I would say the negative side. I mark this just so you can see how climactic they truly are. So, you know, we haven't seen those pushes past these readings really since we went into that very volatile decline. And, you know, we could be looking at a selling initiation here. Typically, you know, when you come off of a positive day and then you end up with the negative day, when I see negative readings like this, climactic, I do generally look at them as an initiation. The only thing that kind of is throwing me right now, and again, this was a discussion we had before the show, is the fact that we have that lower Bollinger Band being penetrated by the VIX. And typically, when you see those punctures, it comes before a rally. But as you can tell, it's not always the case, because these bands, like you saw back here in October, can start expanding as things get more volatile, obviously. And so we may be looking at something like that going on here. You can see the ones that I was looking at the end of December, you know, that was a pretty good move, but then we ended up with a move down. And you can see right here, these three punctures really didn't amount to much at all because we were at this support level and we failed. So we just never really got the move off of that VIX reading, but you know, we were in that volatile area. And so the VIX readings were very high at that time. We're looking at a reading. Let's see, what are we at right now on the VIX? 1660, 1233 is the band. So, you know, that 1446 reading is still pretty much in that complacency zone. But we'll have to see what these climactic readings to the negative side end up really turning out to be. Because it is telling kind of a two stories there. We had pointed out, we always look at, well, now we started watching divergences on our short-term indicators. We didn't really get these much at all before. And if you go back in time, which I did just because I was interested, almost always the tops travel together. But since we ended up after that 2018 correction, you know, we ended up with these divergences starting to show up. And, you know, we talked about it, you and I, about how, you know, what it seems to be is not necessarily a sign that we're going to end up with a big decline. I mean, it kind of worked its way that way, but, you know, we got that rise and we held on to that support level after this one. But really attention flags. And so, you know, we have the negative divergence. It's playing out at this point. You know, it's already happened and we're starting to move down there toward the zero line. Typically, you know, we're in the neutral territory, but you don't want to see these in decline, as that certainly suggests in the short term that we'll get more decline ahead. Intermediate term. And this, you know, when we started to see the really nice rise here and we were getting it with the rally, while I was optimistic, because you really want to be optimistic when you see these lows come in on these indicators. But as I wrote about probably a week and a half ago, I can't get excited about these types of readings until we get the crossovers. And the reason being is this is what can happen. You can get a lot of twitch and not the actual reading of what's going on here. And right now, what I'm reading with these is there's problems, because now we have two tops below the signal line for both of these indicators. So not.
If you notice the indicator top and the market top in end of February, that's the high, and then you get a decline, and then price goes up and makes a new high.
Yep.
And but the indicators basically don't go anywhere. They just roll over. Mm-hmm. So you have a huge negative divergence right there.
Yeah, absolutely. So it's certainly not what we want to see. All right, I'm going to move it on and pass it to you. Let's go ahead and look at the big four.
Okay, the dollar. You see, I had some interesting moves this week.
Yes.
Made it back down to a rising trend line. It's the bottom of a rising wedge formation. And I've got those dotted lines in there to show you how it you know, we had a breakout above a triangle, then another breakout above a rising wedge, but that didn't last long. So it's back into below that first rising wedge, and
there's the first
likely to break down out of there.
Mm-hmm. That's the expectation.
Excuse me?
That's the expectation for sure. And the PMO is not cooperating either.
And here we see a longer term rising wedge. And notice that the weekly PMO is basically moving sideways, but it's positive. So essentially, in this longer term, you've got positive movement, but there's no acceleration. It's basically settled out into a steady speed. Mm-hmm. It's still moving up.
Mm-hmm. All righty, next up, gold.
Okay, I have not seen the gold today yet, but you had to break down from a rising trend, bottom, and it has rallied pretty well from that low in early March. The PMO is telling us that internals are kind of dead neutral.
Mm-hmm.
PMO's on the zero line and running sideways.
Yep. Trying to scoop, but alrighty.
We have a rising trend channel that's a little tenuous, but the weekly PMO is has been positive but black, and it's started to move a little higher.
Alrighty.
Got really good resistance up there, about 1375.
Yeah, I'll just show that one more there. Okay, oil. It's been doing fairly well.
Well, today it didn't do so well.
No, hadn't seen
Reached
that.
the top of the trend channel, and it really had a bad day today. The PMO topped.
Yeah, it's now, and that's a wedge, right?
It's a very loose wedge.
Yeah.
Yeah, it narrows slightly. The lines converge just ever so slightly.
Mm-hmm. It could have a lot more life left.
I mean, I just, fundamentally speaking, I can't see oil, going significantly higher. Let's put it that way, $80 maybe.
Mm-hmm.
But, that's just because the supply is so great on it now.
Mm-hmm.
Here we see a much more pronounced rising wedge formation. Still positive movement, evidenced by the PMO, but I would expect this rising wedge to break down. I don't normally put in the single chart of USO and weekly, but I noticed today was worth mentioning how that wedge is really so clear and tight.
Mm-hmm.
And if we go to the next one, it'll be a weekly. It'll include the WTIC oil, so it's right around $60, and you can see you don't see the wedges as clearly on these charts.
No. Okay, GLT. Wow.
Yeah, I looked at the chart today. I said, yikes. But, thank you, Fed, for becoming extremely dovish.
Mm-hmm.
And so I remember thinking a couple of months ago that I could just put bonds on an automatic bearish and just leave it at that. But certainly the Fed's changed that.
Mm-hmm. Wow.
Yeah, 3.5% from Tuesday's low. That's a pretty good move for bonds.
Yes. Yeah,
and here we can see the important overhead resistance it got through today. It's not a decisive break, but I assume it's going to go challenge the resistance 134 there.
Yep. All righty. Bonus. You've got a few minutes.
Bonus charts, right.
Yes.
Well, I got to looking through and I saw the advanced decline lines. Now, I noticed that the advances minus declines is it's actually making new highs as opposed to price, which is not. I mean, it's exceeded the all-time high, whereas what price has not. So that's right now. We'll call it a reverse divergence. You have a lot of breadth coming in, but it's not getting price up there.
Right.
That advanced decline volume it reflects what's going on with price. I drew the lines down the declining top lines on the price. That's just to point out, this is one of the ways you can tell us if something is in gear. Volume and price broke out above the declining top line about the same time, and confirming.
Mm-hmm. Okay, next up.
This is a minor issue here, but it's looking at some divergences on the McClellan Summation Index. You can see back in September we had a negative divergence, and preceding the major top we had. Mm-hmm. And then in November we have a reverse divergence. We've got declining price tops with breadth making new highs, as opposed to the two tops there. Mm-hmm. And going most recently, we've got another negative divergence with price making new highs and breadth topping out much lower.
Yes,
it's good. It's a good looking indicator. I like to keep an eye on the summation index. You look at the McClellan oscillator. Really hard for most people to make something out of it, whereas the summation index really gives you a more organized picture of the flow.
All righty.
And last
final one.
Couple months ago, I maybe it wasn't a couple of weeks, several weeks ago, I did an article on Nike pointing out a double top and showing a negative long-term negative divergence on the OBV, and the PMO had topped in February. So I thought it was worth looking at the possibility of a double price top being upon us. Mm-hmm. When, of course, Nike then rallied and went against my better judgment. And today, it finally caught back up. So things don't always turn out exactly the way you would imagine they.
No.
Will, but it's certainly, it's more lopsided now, but it's still a double top. Notice the negative divergence we got from the early March, early March top versus the most recent top. And I like the divergences on OBV to be closer in like this. To have them over several months, I get a little nervous with that, although they sometimes appear to be quite rational, as that one does. Mm-hmm. Notice another thing that I didn't mention it in my article because I don't think I had noticed it, but PE is like 63. I'm sorry, 63, and it's that's really wacky. That's way high for a company.
Yeah, absolutely
overvalued.
All right. Well, excellent show today. I think we covered quite a bit. Feel free. You really need to read Carl's weekly wrap if you aren't familiar. I know our DP faithful are, but on Fridays, Carl writes basically what we just talked about. Only you're going to you'll hear him talking about the indicators as well. So check out the weekly wrap that should be published later tonight. On the
and have a chance to think about the close up for maybe 20-30 minutes, whereas when we come into the show, it's like we're like parachuting in trying to figure.
Well, I want to thank all of you for being with us today. Remember to complete the survey. It's below the viewer, and we love to get that feedback. And as a reminder, we air Fridays at 4:30 p.m. Eastern. Have a great weekend, and we'll see you next Friday. Happy trading.